Ladies and gentlemen, the Hong Kong stock market crashed by 9.4% today. And does this mark the end of the bull run that we're looking at? So today I'm going to analyze for you what happened and what is needed for this bull market to continue to go on. And there are telltale signs whether this one will last or not. Let's watch until the end, shall we? To start off, it's important for me to reiterate to everybody that I am not calling for the stock market of China or Hong Kong to crash. I'm not cursing the China stock market or Hong Kong to crash either. I'm just analyzing what is happening to the stock market and even give you insights to what I think based on economic experience globally, what will cause the whole stock market to go up or go down. And it's actually quite easy to tell the outcome. Let's watch on, shall we? These are my usual disclaimers. And let's go. So what happened to China stocks today? Well, if you were to look at it, it's not so bad when you look at the Shanghai index. It actually went up by 10% at the opening, but it went down and down and down, eventually closed at around 5% plus in the end of the day. But the real telltale sign is the Hang Seng Index, HSI. It crashed by a frightening 9.4%. And that's very drastic because all you need to do is to continue to crash at this rate. Then you completely wipe out whatever the Hang Seng Index has gained over the last 2 weeks or so. Now, there are reasons why this thing happened, okay? And let's take a look why it happened. To first start with, why did the bull run happen was largely because the China Central Bank announced monetary easing, right? So this expansionary monetary policy, and we have already have a video on it. Many things happen. They basically cut interest rates. They basically lower bank reserve rates and things like that, and basically try to stimulate economy through monetary policy. And that's the mandate of the Chinese Central Bank. And that really sparked off a whole bull run, and that's something that we have not seen for a long time, and that's something quite remarkable. And unfortunately, the monetary policy hit what we call a China Golden Week, okay, a China Golden Week, and the market was closed for a while, and then after it's open, it went up a little bit more. But the Hang Seng Index, however, which is the Hong Kong index, which is made up of a lot of Chinese company, actually went up and up and up and up, and then it went down by a phenomenal 9.4% crash. So the whole bull run was really sparked off by expansionary monetary policy. It's almost like the Federal Reserve monetary policy that we have seen during the pandemic. Now, it's important for us to know that the Chinese Central Bank is throwing those stimulus in reaction to a serious problem, which is basically that there's huge youth unemployment, there is a very bad economic slowdown. Talk to any business people, they will tell you in China how bad it is whatsoever. This is like giving medicine to a sick person, okay, in hope that you will recover. So the Chinese stock market right now is reacting to a possibility now of an economic recovery. I emphasize the possibility of an economic recovery. Someone might say that, but that's exactly what the Federal Reserve did, and therefore the whole economy of US and the rest of the world recovered because of it during the pandemic and things like that. Well, that's quite true, but the problem of the Chinese economy right now doesn't look quite like the US problem, and it has a resemblance more of the Japanese recession that has lasted for 30 years and also has some smell of the Great Depression of the 1929 or so. Now, it's not exactly the same. No two economic downturns are the same. But in both case study, if you look at it in the Japanese case and the 1929 Great Depression, this kind of nature of economic downturn requires powerful expansionary monetary policy and powerful expansionary fiscal policy as well. Both need to work together. And it is also arguable that in this kind of situation, when you throw monetary policy in an attempt to stimulate the market, it doesn't quite work as well. What everybody is hoping for is what we call a powerful expansionary fiscal policy. What on earth is that? It simply means that, the government spent a lot of money building bridges, building roads, whatsoever. And in 1929, it was quite funny. There were jokes that the government was spending money by simply asking one group of workers to dig a hole and another group of workers to come and fill it up. Just literally stimulating and creating jobs and creating economic activity by government fiscal policy, right? Cutting tax rate and giving government subsidies and grants and spending money. So that is what everybody is looking for in China right now, right? Monetary policy is important, but everybody has a view that it's not sufficient, right? And everybody's looking for a fiscal policy stimulus. And to be fair, the Chinese government did give hints that this is coming as well. Well, something happened today. Well, it looks like the euphoria has ended. Today, there's a National Development and Reform Commission, NDRC, press conference. And the chairman of the NDRC was giving everybody a lot of assurance that the engine of Chinese is growing well. The Chinese economy is growing well. They were likely to hit the target, and things will be quite as good and things like that. Say a lot of things. I watched quite a large part of it. But you know what? It has a lot of upbeat comments, but everybody's looking for what are you gonna throw in, right? Well, in the end, nothing, right? Everybody was like, hey, you talk so much, yeah. But there's a lack of major stimulus that we are expecting from you. So in a closely watched press conference, the markets were disappointed by absence of specific stimulus measure. While the commission vowed at a briefing to have a more counter-cyclical macroeconomic policy, expand domestic consumption, improve livelihoods, blah, 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 blah. But they didn't exactly say what they're going to do, right? Beijing will advance 14 billion yuan at 2025 central fiscal policy this year and highlighted, a list of strategic policies that require 100 billion yuan to funding. Now, $14 billion is really not a lot of money for a big mega China. So everybody was like, don't really see much real substance inside this briefing. Now, in all fairness, and if I understand the Chinese bureaucracy, this is not exactly the right commission that will announce major fiscal policy. But everybody was hoping for it. And guess what? When you have this kind of conference where you don't announce much meat inside, the whole market get disappointed and it crashed. So what did the analysts say so far? There was some optimistic, some not so. Now take note, I try as far as possible to get the more neutral analysts, right? So what I did was to look at more South China Morning Post, and I've also tried to look at more Chinese analysts, okay? So or Chinese analysts. The analysts actually said, right, they created an expectation of a much bigger stimulus. That was during the press conference a week plus ago, okay? During the central bank stimulus. So everybody was disappointed at this meeting today. Even worse, they talk about front loading from 2025, so no new money. Basically, they've created a bubble, but they're not ready to feed it more with fiscal stimulus, and bubbles need that. Words are not enough, right? So an OCBC, a currency strategist, said that, so far the NDRC press conference seems to run short of details regarding the stimulus measure. Hopes were raised, but delivery was disappointing. So as a result, the stock market crashed. So we're likely to see stock market to consolidate, according to some analysts, right? So markets are hoping to get some guidance on the size of the fiscal stimulus at this press conference, but the Ministry of Finance was not in attendance. So therefore, this information was lacking. And it's likely that you'll see markets consolidating and digesting what was already announced. The Ministry of Finance is actually the party that's going to implement some of these policies, and we're all looking for some signals on that one. So the NDRC is not exactly the right party that we look at to announce this fiscal policy, but the whole stock market was looking for it, and then because it was absent, it crashed. So a lot of hopes have been priced in. Okay, again, looking at OCBC, Managing Director, Investment Strategy, he says this. Okay, there are no clear signs that the Chinese economy is on the mend yet. So this rally is largely sentiment-driven and sparked off by Beijing stimulus blitz late September. Ultimately, for the rally to be sustainable, we need to see more fiscal policy and measures to support the economy and property market. A great deal of hope has been built into this recent strong rally in the recent weeks, and we now need to see additional government policy action to support this uptrend. So in order for the whole market to continue its bull run and the whole economy to have an uplift, right, like what I said, analysts, myself, all say that fiscal policy of a sizable magnitude is needed. And so far, we're not seeing it. Maybe it's coming, but so far, I've not seen it. So just to be very clear, no announcement doesn't mean it's not coming, right? So maybe it'll be announced later, which I think it will be, but just that we don't know the size, right? Ding Shuang, chief economist for Greater China and North Asia at Standard Chartered Bank, Hong Kong, okay, actually said this, right? It looks very related. The only driver for stocks is today's NDRC event. Markets were high, stock market had high expectation, but this is the NDRC, not the Ministry of Finance. Even though they didn't announce fiscal stimulus today, doesn't mean there won't be stimulus, right? So bottom line is there is still hope. Doesn't mean there is no fiscal policy that's coming, but there's still hope. Everybody is looking forward to it. So Gary Ng, a senior economist based in Hong Kong, I say this, right? Nobody is really certain about what's going in the stimulus. There could be a bit of uncertainty about whether it's above or below market expectation. So the key point that we want to look at is fiscal policy announcement. So that will determine whether the bull run will continue or crash, right? So this is fiscal policy. Now, fiscal policy is where real rubber meets the road. Now, monetary policy don't really cost the government that much. Fiscal policy is where the government of China have to put meat into the plate, So you want to see real thing, this is where fiscal policy is. And if the government cannot put up a big fiscal policy, simply means that, I think the whole recovery will not be as good. Now, not just I say this, analysts are all gradually saying this, right? So Chinese stock is now more a threat than a long-term policy. In short, I've always used this phrase, it's a gamble. It's a gamble. In short, it's another phrase, or it's just a speculative play. So Chan Ka-sing, another analyst, said that Chinese stocks has become more of a trade rather than a long-term investment. Much of the rally has been fueled by fast money betting on what Beijing will do next to prop up economic growth, and expectation vary wildly. So basically, it's just a gamble at this juncture. You could win, you could lose. It's very difficult to tell, So I need to say this. A lot of people say, Mr. Loo, you're just running down Chinese market. You hate Chinese market, right? You're just a lackey of the US government and things like that. I don't know how. Always get these funny names, right? I'm not saying it won't go up. Okay. In fact, I'm very happy when people make money and become rich. Okay. I'm just saying that it is very dangerous. And many of you cannot afford this risk. People are throwing in money, just gambling, your very important retirement funds away whatsoever. I don't think we need to dabble with this kind of a gamble. I don't know how to tell people that this is really very speculative nature. Not I say this alone, analysts are saying it as well. So I need to emphasize this again. Chinese stock lack predictability. And the single reason is this. They are really heavily weighted by policy risk. And how do you evaluate policy risk? It's very difficult to evaluate, right? Especially comes to China. It's arguably the only President Xi Jinping can tell you, what is going to happen next, right? Or his ministers and things like that. But policy risks are very difficult to evaluate. Now, there are people who debate to me and just say that, the S&P 500 and NASDAQ that you always talk about is also a gamble. Well, in some sense, that's true. There's some level of risk involved in all investments. But you just look at these two graphs and you will see, right? So this is S&P 500 and this is the NASDAQ. This is the Shanghai Index and this is Hang Seng Index, right? So of course, in the beginning years, there was a Chinese economic miracle. It did really very well, okay? But since 2007 or so, there was a huge phenomenal crash and it's never recovered since then. By the way, it does sound like STI, but even STI has recovered quite a lot, right? So the Hang Seng Index has the same story as well, right? So on the other hand, what we do have is that the S&P 500 and NASDAQ has compounded powerfully over the last 100 years of history. Now, could it be that so sway, right? So bad luck, it has been compounding for 100 years, but it's just in our lifetime, exactly at this moment, it stopped compounding and crashed and never recover again till the day I die. It can happen. But let's talk about chances, right? Take about chances. Would you take your bet here or would you take a bet here, right? So I cannot tell what you're going to do. It's very clear what I'll do. Now, a lot of people say that, Mr. Loo, you don't know shit about the Chinese stock market. And it's true, right? It's true. I don't have a know-how to invest in Chinese stocks, okay? I don't know enough, okay, about Chinese stock market, and I don't need to, right? I just do what I'm best at, and I just do it well. Simple, plain, dumb, CPF, special account compounding, just compound it, and then after that, layer with S&P 500, layer with NASDAQ, and some other stuff I put on top as a higher risk item and things like that. And that's enough. I can live my life pretty well and pretty richly as well. And I need to say this, right? For some of you who claim that you know the Chinese stock market, good for you, okay? Yeah, I have serious doubt you really know this Chinese stock market, or you're taking a gamble. To those people who just want to ride the wave and just charge in blindly and things like that, right? I just need to emphasize again, there is a high risk in doing. High risk and gamble simply mean you could win or you could lose. The question is this, right? Can you afford to lose? Right? Can you afford to lose? If you have to dabble with it, you can't control yourself, have to dabble with it, I will advise you touch it only what I call gambling money. Gambling money is defined as money you can afford to lose it all. And if not, don't touch it. Okay, don't touch it. You live a better life. I think you can safely put money in T-bills and things like that. You still do very well. Okay, so thank you for watching. I know this has sparked off a huge blast of comments, in both sides, against and for. Let them come, in our Telegram channel or in our YouTube comments. So I'll see you in a day or two. Thank you and goodbye.